Hi everyone, and welcome to the next lecture of the chapter, which is all about learning how to read financial statements. Now that you understand how the stock market works and how supply and demand are the major driving forces in the stock market, you are now ready to learn about a tool that is used to evaluate how the supply and demand for a given company will change over time. This tool is the company's financial statement. When deciding whether or not to invest in a company, analyzing the financial statements can often provide deeper insight into the development and trends of a company. The financial statements allow the public to see how a company manages their expenses, which can indicate how a company plans to grow, whether operations are sustainable, and by diving deeper and deeper into the statements, more and more can be revealed. When analyzing the financial statements of a company, it is important to remember that the numbers that we see aren't useful on their own. We must look at past performance and industry standards as well as other external factors that can affect a business. These in turn help us evaluate the health and future prospects of the company, which in turn help indicate how we think demand for the company will change over time. These next two lectures will dive into the different financial statements companies have in a bit more detail than you probably need. However, I think it is important to have done this exercise once thoroughly for 4 reasons. So the first is going through these documents lets you know what is available to you so that in the future, if you are looking at investing in a company and have a specific question about their financials, you know where to look. Second is covering basic financial terms and looking at the structure of financial statements will help boost your overall investing confidence by proving to yourself that you are certainly capable of reading financial statements and learning about the world of investing. 3. In your future endeavors, you may only need to use half of what I teach you. The problem is, I don't know which half, so I'm just going to teach you everything I know. And 4th, some of you may be thinking of pursuing a career in finance. And if this extra bit of explanation piques your interest and ends up helping you find a career that you find fulfilling and exciting, that would make me very happy. The goal of this section is not to make you think you're an accountant or some other sort of financial professional, but to help show you a very powerful tool that all public companies give out to the public, which are their financial statements. I have taken time and care to bring you what I believe is the best content possible and explain it in simple ways, as well as extract what I believe are the most important parts that you need to know. In fact, I am not a certified accountant or any other type of financial professional. I have learned everything I have through reading, research, and practice. However, this is exactly the reason I believe I'm able to bring you the content you need to know, because this is the content I have found that I need to know. Of course, when you are considering making any financial decisions, I certainly recommend consulting a professional. However, I'm trying to make it so that you have a baseline understanding of some key components of finance, and through my experience, I have found that being comfortable with reading financial statements is a powerful tool to have. I do want to make it clear, though, that I do not understand all of the accounting and financial details within these statements. Some of them get quite complicated and probably require an accounting or finance degree or certification to have a complete understanding of all the ins and outs. However, I do believe it's possible to have a basic understanding of these statements, and even this basic understanding, I think, will add a lot of value for you. Okay, so with all of that covered, we can finally ask, what are financial statements? Now, there are 4 main statements, each of which are kind of connected to each other. The first is the income statement, which is also known as the profit and loss statement. This statement shows the success or failures of a company, usually over a fiscal period of a year. And a fiscal period is usually either every 3 months, which is known as a quarter, or the fiscal period could also be for the entire year. By analyzing the past performance of a company, trends can be identified which help investors predict future gains or losses. The next statement is the Statement of Changes in Equity, which is also known as the Statement of Retained Earnings. So this reports the change in total shareholders' equity for the period. Now, shareholders' equity, as we'll come to see, is just equal to the total assets of a company minus the total liabilities. And we'll dive into the details of what assets and liabilities are as well. So the next statement we'll be looking at is called the Statement of Financial Positions, which is also known as the balance sheet. And this reports the total assets and total liabilities at a specific point in time. And finally, we'll look at the statement of cash flows, which provides information about cash receipts and payments for a specific time period. In the next two lectures, we are going to walk through an example of a made-up set of financial statements so that you can get a better understanding of the structure of each statement as well as what they are used for. So, thanks so much for joining, and I can't wait to see you in the next lecture.